Good morning, everyone. Whether the market is riding low or high, stay informed with the Mortgage Guy. All right, just coming to you today because I want to give you some key bits of information here. It's been a crazy, crazy market this year. It has just been nuts. Lots of ups, lots of downs, but just lots of negative. So certainly there's, a lot more negative that outweighs that positive. But let's talk about emotions. I don't want people to ride on emotions. That's the whole point of this. When you ride on your emotions, you're going to be riding with whatever the market's doing. That is going to affect you greatly. So just like we'll relate that to the stock market. So emotions to the stock market. Most forecasters and everyone says, number one, develop your own opinion. But number two, you want a dollar cost average and you want to be able to manage your risk. Dollar cost average, manage risk. That's it. So you should have, so let's say you're, going into the stock market. Again, I'll relate this to emotions. You go into the stock market and you say, hey, the market goes up, market goes down. I'm going to have certain points where I'm going to dollar cost average in, I'm going to buy, but I'm also going to manage my risk where there's certain points where I'm going to sell. And so there's tight windows in there, but over the course of time, for the most part, you're holding most of what you put in from day one over the course of however long, 5, 10, 15, 20 years, whatever, you've developed for yourself, whatever plan you've developed. And you have typically tighter windows because, again, it's more of a long-term play in most cases. Sometimes you can look at it from a short-term perspective, but that's why most people fail because they ride on emotion and they don't manage their risk and they don't put in, they don't try to do some dollar cost averaging and have a good plan into it. They just ride with the market, which is what the market wants you to do. They want you essentially to lose money. That's the whole point, because then it layers the pockets of investors because they're doing what's right. They're getting your whatever stock, we'll say Bitcoin for cryptocurrency. They're going to get your Bitcoin for super cheap because you decided to sell. So when all these people, the mass amount decides to, oh, I'm riding on the emotion, decide to sell, well, then I'm going to go ahead and, buy it super cheap so I can make more profit. That's how it works. That's what they want. So the people who actually do it right actually succeed, but it's very few who actually do it right. And again, there's probably more to it that's well above, what I know. But for the most part, that's the gist. Manage your risk and have a plan. Manage your risk, have a plan. So just like we talked about with your emotions, with your business in a market like this, again, we're talking about real estate, so keep that in mind. Don't let your emotions ride with the market. One thing that's interesting is you'll find people today. So when consumers or America or the world starts, when they adopt something, they start to talk about it. So think of, what goes in is also what comes out. Okay, we see the market's getting worse, worse, worse. We've got the news. It's freaking horrible. Okay, now we're going to start spinning this to make it sound good. Well, I remember when rates were 13%. Oh, rates are at 5 or 6%. I remember rates were 13%. But what about when rates were low? What did you hear? Oh, rates are low. Rates are low. Oh man, 5%. Like, why would I ever do a 5% loan or a 4% loan when I can do 2.5%, on a refinance? I'm going to find someone who's going to give me that 2.5%. That's exactly what happens when consumers adopt it. They start to spin it. And a lot of that, again, the media likes to throw in market crash and things like that. When you go to scale your business, don't let the market shift your focus. You just need to develop a plan, an opinion, and adopt that plan and opinion and say, okay, here's how I'm going to move forward with the current market. Here's some future, like some near future estimations that I have, or, outlooks that I have. And then I'm going to have some distant future, a couple distant future outlooks that I have as well to, come up with my plan on how I'm going to adopt and change, improve, grow over the course of time and scale my business accordingly. Okay. So we're going to go into just some key bits of information that I think are very pertinent to Well, yes, the economy, but also real estate. And I'm going to relate this information on how it's like, what is my outlook on real estate? And so first, we're actually going to go to this chart. Okay, so we go to this chart. This is a chart of, again, financial world economy. So you see this going up and then the real world economy going this way. Okay, what is this representing? A distorted view. Why? Everything was in sync. The US changed their currency, from gold over into the dollar. So over here, people thought that the dollar had the same value as gold. That's not true. It's a new currency. What do you think happened? So we're going to change the view right here of the actual currency or the value of a currency. Now here we're going to think of, okay, costs will go up and the more you print will also devalue that currency. So you have to print more. Why? Because you have this view that basically has not changed. This has been the same view, thinking that our currency was the same here as it is the same here. And it's outweighing. And that's a bad view. That's a distorted view. Okay? Because now you think, oh, well, I'm buying bread. Well, unfortunately, when you bought bread here in 1971 and you bought bread here in 2022, it did not cost the same. Okay? So we're going to go up here. And so 1971, money was distorted. So it's a view that has changed. So like the inflation rate didn't change, or it might have changed a little bit. There might have been some things that happened in the economy, but for the most part, the main point of 1971 was that money changed. So the view of the value of money in the US economy had changed. So we transferred from gold to the dollar. Then we see the view of currency value was distorted, but this is when printing started. Why? Because that's when the dollar started. Duh. So we take this to 2008. Okay. So 2008, obviously not a pretty year, at least for the US. I'm assuming probably for most of the world. But again, we're going to go, we're talking solely about the US. Okay. That's the whole point of this. Big banks were bailed out and money stayed on Wall Street. So we'll go down here to this chart. Okay, we'll just call this, right in the ballpark of about, because this is a pretty decent spot, probably about here. Okay, so we'll say 2008 was about right at this point, right in here. Okay, so you saw a nice little spike up, and then a little spike down. Okay, but for the most part, banks were bailed out. Well, what happens with money? A lot of it stays on Wall Street. So it goes to banks. It goes to, big corporations and firms on Wall Street. What do they do with that money? They didn't give it back to consumers. They didn't give it back to the population. You didn't see a check in your account at that time if you were, an adult at that time. You saw that money go to bail out businesses that were too big to fail. So big banks were bailed out. Uh-oh, that money stayed on Wall Street. It just stayed there. It just got transferred over. That's all that happened. Also at this time, the printing of the dollar exploded. So again, we're kind of saying it's right in this ballpark, probably around this line right here. And then bam, you saw a nice jump up. So we print more. Think, the more money you print, the more it devalues. Okay. Then we go to 2022, bailing out and giving money back to citizens with COVID. So there was money kept on Wall Street, bailing out businesses, whatnot, but there was also a lot of money that was given to citizens just from the stimulation checks and things like that. Printing exploded even more. Go here, 2022. Saw this little drop. This is about the time of COVID right here, 2020, and just skyrocketed. Again, a massive explosion. The more you print, the more it devalues. The more the view also will be distorted Because again, that separation continues to increase. And as you're devaluing, cost goes up. Real simple. You take these into perspective, you see printing, and even more printing. So what is the repetitive theme? When there's an issue, they like to print more money. That's not a good thing. That just devalues the currency even more and causes costs of goods and everything really to just increase in cost. So next, the next key point is if the inflation rate increases even 1% and they stop printing money, the U.S. economy, our overall debt would actually increase $30 trillion. So it cannot happen. So the Fed can't raise rates to stop inflation. So there's a point when they have to say, okay, we have to stop raising rates because it's not actually really stopping inflation. And the other side is they cannot stop printing either. So you can't really stop rates you can't stop inflation by raising the Fed rate or the inflation rate, and you can't stop by printing either. So what do? Well, we just need to look at where the money's going on Wall Street, because that's big money. That's wherever that money's going, ideally is where you want to look as far as near future and long-term future. Okay. So we'll start here. Energy. Number one thing. Everyone's pouring money right now into energy. Now you think electric vehicles and things like that. It's not just electric vehicles. Also think about the pickaxes, the shovels that go into creating the electric vehicles. That's the key. So who generated probably the most wealth through when they would dig for gold in the United States, or the gold boom, or whatever you want to call it. I forgot what it's called. It was not necessarily the people who dug for gold. Most of them actually failed. It was the guy who sold the pickaxes and shovels for the diggers to go and dig for gold. Think about the pickaxes and the shovels and all the stuff and the gear that they needed, because those people made tons of money. Okay. Energy, focus on those companies, the pickaxes, the shovels of the energy industry. Also, you see money just being poured in to new technologies. So think about this. I don't know the exact dollar, but the amount of energy needed to run an electric vehicle is so much greater than the gasoline you need to run a gas car or a gas operated car. Okay, so fuel, gas. Okay. They're pouring so much money into the technology for these electric vehicles and for them to improve and use less energy. Okay. Whereas they could take that same money and apply it to gasoline technology and improve that you'd be able to do it for a lot cheaper, and you'd probably be able to improve it even more and just use the gas cars that we have. But instead, they're going electric. Who knows if that'll change, what's going to happen? There's a lot around that. But again, energy has been a massive focus. And a lot of people just think about like Tesla, and they just think about the actual, electric vehicle. Like that's the big thing. That's the new thing. That's what the media and everyone wants to talk about is electric vehicles. Well, that was after Tesla actually launched and people started driving them. That wasn't before Tesla was a thing. There was only a few people who bought Tesla before it was actually a thing. And then once, Tesla had its little boom, they all made and profited a lot of money. And then, now it is what it is today. So just think about energy as a big focus over the next 10, 20 years, and think about carbon offsets. I think carbon offsets are going to be a huge thing. companies are already starting to consider their finances, their budgets, and actually purchasing carbon offsets. So in other words, the energy footprint that you produce in, with your corporation, you want to offset that with a carbon credit. And there's a couple different carbon credits that you can buy. And essentially you will be offsetting that by, for example, buying a spot in the rainforest where it's at. Okay. And they will preserve that land and make sure that they maintain it and help, think about like natural health. Your body has, you have to make sure your body is healthy and, and good to continue on and improve your life and things like that. Make sure you're ready for work and all that good stuff. Same thing with like our world health, like the actual land itself. Like there's actual health that we need to, make sure that we maintain. And so that's what those carbon offsets will do. Over the course of time, those carbon offsets may not be needed or as needed, because then ideally the health of the world will actually improve. Next thing would be currency. So currency, ideally, again, with new technologies, literally just about every economy is shifting to electronic. It is easier to transfer. It is less in fees. There's new technologies that could help us getting away from the printing press as well. There's a lot of positives to an electronic currency, but there's also some negatives. There could be, again, from a government standpoint, you could track where money's going to and fro. You could be able to source a lot of things